Hello friends, welcome to Commerce Gyan. In this video, we will discuss about fall of household savings in the current financial year 2023. So, in this year, it was recorded 5.1% of GDP. So, this was in news because household sector saving in the financial asset has shown a sharp decline uh, to 5.1% of GDP in the 2023, right? So before going to that, discuss the all the issue. Now let's discuss what is household savings. So household saving refer to the money left after the household pays taxes spent on the consumption of the goods and services, right? So this is the definition of household saving. Now there are three components of this. So first one is financial asset, that means currency, bank deposit, pension, insurance, equity, and related product. If you see second one, that is the physical asset. So investment in the fixed asset of the construction. And third one is gold and silver ornament. So these are the three main component of household savings. Now let's see what is the significance of household saving. So it is vital for the economic long-term growth, right? So this is the as we say more, that means we have more money to invest in capital, right? So as it is the primary source of domestic loanable fund besides saving from the business and public sector. So government can borrow money from the household sector and that can be invest in the yep, in the economy, right? So the money moving from the household to business sector can be used to fund capital investment, thus increasing the productive capacity of the business sector, right? So this is the uh, main significance of the household saving. Now if you see the household saving rate, so this is the formula that defines the household saving rate. Household saving upon the personal disposable income into 100. So this is the household saving rate, that means household saving upon personal disposable income into 100. Now what are the factors that influence household savings? So if you see the first one, that is the income. High income household usually allocate more income to saving. So this is, that means high, if we have high income, that means where we can usually allocate more saving, that means then consumption, because they cannot fulfill the more desirable item. Low income household consume more than they save. So that means if we have more income, that we are tendent to more to save. Next one is interest rate. High real interest rate makes saving more attractive, right? So if bank offer more interest rate on our saving, that means we are going to save more money in the banking sector, and finally bank will lend to money in the business sector, right? So the high nominal interest rate will be useless if the inflation is also high. So as we know, interest rate is also related to inflation. So here is a relation with the inflation too. When it is lower than inflation, the actual return cannot offset the decline in the purchasing power of money. Hence, households are reluctant to save. So if inflation is high and interest rate is low, so in that case, people will be reluctant to save. If you see the third one, future income expectation. So household increase consumption rather than saving when they are optimistic about their future income, right? So this is also a factor, that means household increase the consumption then the saving. So in many cases household want to consume more rather than saving when they are more optimistic about their future income. It commonly occurs during the economic expansion. Fourth one is wealth. So increase asset value encourages household to consume more. So this is also relation with related to wealth, right? As the asset value rise, household find reaching their wealth accumulation target without the saving more, right? So there is also saving and wealth relation here. Fifth one is taxes. Higher personal tax reduce the disposable income, hence decreasing money allocation for the consumption and saving. So if the personal tax higher personal tax is high, then in that case uh, it reduces disposable income, right? So in that case it decreases money allocation for consumption and saving. So now let's see why household saving is important for government, right? So first one is supply sources. There are supply source of the domestic fund for capital investment, as we have discussed. So this is the uh, source for capital investment, right? Next one is profit. Households save their money into various type of asset, such as deposits, stock, bonds. In return they receive interest, income, dividend and capital gains. So as we know, people save in deposits in banks. They invest in stock and bonds, right? And they expect future return, that may be in income, dividend or capital gain. Third one is increase production, right? Companies requires money to purchase new equipment and other capital asset. They raise fund by issuing bonds, right? So companies also issue bonds to gain public fund. Next one is financial market. Supply demand of money takes place in the financial market as the households invest in corporate bond, money flowing to the business sector. Now, with the money, companies can invest to increase their productive capacity. So, if the saving is high, that means financial market also going to boom, right? Next one is investment in capital asset. It is essential for economic growth. It is the key driver in increasing the productive capacity of the economy. Higher production capacity will lead to the economy to produce more goods and services without the causing inflationary pressure, right? So, higher production capacity lead to economic to produce more goods and services without causing inflationary pressure too. Next one is accumulate wealth. So it allows household to accumulate wealth. In addition to income, wealth is crucial determinant for the consumption. As increased household consumption drive up aggregate demand, stimulate a growing real GDP, right? So if we accumulate growth, that means it will also contribute in GDP. Now, third uh, uh, third one is buffer. So by saving, household sacrifice current consumption for future and consumption. That means if they save, that means they are going to sacrifice their current consumption for future consumption. For this reason, saving allows household to support their well-being, right? So this is also factor. Now let's see what are the status of household saving. So the first one is household financial saving. The Reserve Bank of India data shows that household financial saving were at 5.1% of GDP in the financial year 2023, almost a 40-year low. So that is the big concern for India's economy. That means this is the 40-year low. Next one is household financial liabilities. So if you see the liabilities, the annual financial liabilities of household increased by 5.8% of GDP. So as we know that liabilities means the household have to pay in future. So in this case also, that means they have uh, this is also increase. That means if they have more liability, they will save less. So this is also concern signifying usually higher reliance on the loans for consumption and real estate purchases. So this is also concern. This rate of increase in financial liability was second highest since India's independence. So if you see the in case of liability, so this is also highest in the second highest since India's independence. Next one is household asset. Household assets saw a sharp decline from the 2.22.8 trillion in the financial year 2021 to 13.3 0.76 trillion in financial year 2023. So household asset also have declined uh, drastically, right? So this is also concern. We see the next one, household debt. So household debt as measured by the stock of financial liabilities, this is also remained significantly elevated at 37.6% of GDP in financial year 2023, right? So if you see the overall case of this trend, so in financial year 19 this was 7.9% and 20 8.1%. In financial year 2021 this was 11.5%. Now if you see in the financial year 2023, this is the 5.1%. This is the main concern for Indian economy. So in this case, if you see the next one, primary reason behind the subdued saving and the increased borrowing seem to be stagnant decline in income for the household and small and medium sized enterprise occurring in the midst of high inflation. So as we know, there's currently India facing high inflation, and we are also going to save less, so that will also will create problem, right? So, what are the implication of the fall in the household saving? So now let's see implication of the fall of household saving. First implication may be choke capital investment. May choke the capital investment. Indian government depend on the household saving to finance its capital investment in the physical asset such as the infrastructure, machinery, and the equipment. So if we uh, government not able to raise fund from the public, that means it cannot investment in capital asset. So this is also concern. Dip in the saving could choke the major source of fund for the government's capital investment, right? As we have discussed. Dependence on the foreign capital. Dip in the household saving would lead to the more dependence on the foreign capital to fund the growth. So if that means if government not able to raise money from the public in their boundary, that means they are going to they are going to uh, take money from the foreign, that means outside India. So that will also problem. Next is impact on the investment cycle. Household are leveraging themselves by borrowing funds. This directly impact the investment cycle, given that primary private consumption demand account for 60% of the country's GDP. Next one is increase in debt. As borrowing goes up, future income gets tied up for the repayment of debt, leading to fewer investment, right? So this is also relation in the debt and the saving, right? Next one is rising inequality. The rise in the financial liability with the falling asset levels could be sign of rising inequality, right? So if the saving going to down, that means inequality will increase in Indian society. So this is also a relation with the savings. So that's it from this video. Thanks for watching. If you find this video informative, please do like and subscribe this channel.